My colleagues in academia have no idea what Bitcoin is. They have no idea what fiat is. They have no idea what digital assets are. They don't know any of this stuff. It's not that they're like being restrained from talking about these things because it flies in the face of Keynesian economics and I don't know, universities have endowments and they're not allowed to talk about that. That's just not true. I mean, it could be happening somewhere, but there's this whole thing in academia called academic freedom, and it's very profound in academia. And that is that faculty are supposed to have pretty substantial liberty to pursue their intellectual pursuits, not constrained by who's putting money into the university or whatever, because they have to have that capability to explore new frontiers. So it's not that faculty are refusing to shed light on this. It's the fact they're as ignorant as everyone else in society is about this stuff. So we have a lot of work to do.
Welcome to the 44th episode of our podcast Store of Bitcoin. And today we are joined by Boyd Cohen, author of the book Bitcoin Singularity, Fix the Money, Fix the World, an analyst and an investor known for his clear-eyed insights into the evolving Bitcoin landscape. Boyd brings a unique perspective on how Bitcoin fits into the broader economic picture, from market cycles and adoption trends to the growing intersection between digital assets and traditional finance. His work focuses on helping people cut through the hype and understand Bitcoin's long-term fundamentals. Boyd, welcome to the show. It's great to have you here.
Thanks for having me. Looking forward to it.
And welcome also to Johan, as always, the co-host. How is it going?
Hi, Alessandro, and hi, Boyd. Great to have you on.
Great. I think we can start the conversation with a very important point. I listened to a different of your other podcasts or episodes where you were interviewed. And one good point was the difficulty for an understanding Bitcoin from high qualified people with MBA, PhD. You come from this world. You said you have a PhD, but in the Bitcoin world, maybe sometimes you don't say because it's not seen as a good sign. But also you said you are also impressed by how it's possible that so many people with very high IQ, successful, top education, still not getting Bitcoin. So let's elaborate on this.
Yeah, true. I like an anecdote to sort of dive deep on that was really interesting. So 2-3 weeks ago, I was doing an executive education program. So I have two hats. I'm an executive at Arcadia Bitcoin in Mexico, and I'm also a professor at the number one business school in Latin America called ArcadiaB. And I was doing an executive ed program of 4 hours. And originally I had the topic was way bigger than Bitcoin. In fact, they didn't expect Bitcoin to even be talked about. I brought it up. I had 10 minutes planned for it. We ended up spending an hour because they wanted to go deeper down the rabbit hole with me. And that was, of course, great for me. I enjoyed it. But the funny thing was at the end, in this case, there were 15 executives in different companies in Mexico. And at the end of the hour, one of them said, Boyd, I have a question for you. This makes so much sense. It's logical. How come none of us have any Bitcoin? Because I asked them when we started, how many of you have any Bitcoin? And one of them had said they played around with Bitcoin. And then he said, how come none of us have any Bitcoin and none of us know anything you're telling us about? I said, let me ask you a question. How many of you have an undergraduate degree from somewhere? 100% of them had it. I said, okay, let me ask you another question. How many have a master's degree? About 35% had it. Then I said, all right, let me ask you the third question. For how many of you is the very first time right now that any professor standing in front of you at any university ever even named the word Bitcoin, let alone spoke about it with you for now? 100% of them had never heard a professor even mention the word Bitcoin, not once. And that's the same with our normal master students that go through finance programs and everything. They'll hear about crypto or blockchain sometimes, but Bitcoin and like money and What causes inflation? So that's usually like the first question I ask when I start a Bitcoin discussion, like what drives inflation in an economy? And I ask this of executives, of MBA students, and usually only 2 or 3 out of all of them even understand that. So here's my short answer to your question. The TLDR is our educational system has failed humanity, really. And I would say starting from elementary school, junior high, high school, university, and beyond, we don't educate people about what is sound money, what is fiat money, the evolution and history of money, how fiat can destroy lives. None of that is ever discussed anywhere. And so people in the academic community, so faculty don't know anything about it. Now I talk to some people who think, oh, this is like this whole conspiracy and that universities don't let professors talk about that stuff. To be honest, I think that's, as my favorite coach would call it, bull junk. My colleagues in academia have no idea what Bitcoin is. They have no idea what fiat is. They have no idea what digital assets are. They don't know any of this stuff. It's not that they're like being restrained from talking about these things because it flies in the face of Keynesian economics and I don't know, universities have endowments and they're not allowed to talk about that. That's just not true. I mean, it could be happening somewhere, but there's this whole thing in academia called academic freedom. And it's very profound in academia. And that is that faculty are supposed to have pretty substantial liberty to pursue their intellectual pursuits, not constrained by who's putting money into the university or whatever, because they have to have that capability to explore new frontiers. So it's not that faculty are refusing to share this, shed light on this. It's the fact they're as ignorant as everyone else in society is about this stuff. So we have a lot of work to do.
Yeah, same. Also, in my education career courses, I never heard about Austrian schools of economics. And when I did MBA a few years ago, Bitcoin was discussed, but mostly from the technical point. So like from the blockchain technology and not from the economical part. The economical part was typical Keynesian, where we need to spend to stimulate the economy. Completely wrong.
Yeah. I
That's
will say that in all of my educational experience, I was exposed to something Austrian back in 2000. So this was literally 25 years ago when I was almost finishing my PhD. So my PhD is in entrepreneurship. So it's like really at the intersection of business innovation, et cetera. And one of the perceived fathers of the field of entrepreneurship is an Austrian economist known as Joseph Schumpeter. And Schumpeter, who you may know, is the one who coined the term creative destruction. And what he was trying to do was understand that under what context, if supposedly everyone has perfect information, why is it we have these disruptive innovations that change humanity's future if we all have the same information? And he basically attributed it to entrepreneurs who are able to combine knowledge from different fields and disrupt entire disciplines with totally new innovations. And he's a very much of an Austrian economist, but that was the closest I ever got to Austrian economics thinking. We didn't talk about Hayek. We didn't talk about, the underlying aspect of money. So yeah, similar to you, I never had exposure until, like all of us, we're self-trained economists in the real world of Austrian economics.
Yes, yes. Also, I think I came also to the conclusion that the more expert you are in traditional finance economics, the harder it is to understand Bitcoin, or more than to understand Bitcoin. Everyone was against Bitcoin till the point they are in. At one point, they are in favor. It's not hard to understand Bitcoin, but hard to say that you were wrong on Bitcoin. For someone who is deeply into that field, probably it's harder than someone who is in another field and then start to learn about Bitcoin, and then it's easier or less hard to say, okay, I was wrong in the past, or let me look at it and then understand. It looks like for
So
me,
here's my take on that. A lot of people have the view you just said, and I don't think it's wrong. But what I actually think from my own observations is that Bitcoin creates this sort of cognitive dissonance for all of us. It's this like hurts your brain thing to get your mind around. And the deeper you are in Keynesian, the more, which is aligned with what you're saying, right? Like the smarter you are in TradFi, for example, the harder it is to get. But I actually don't think it's as much about admitting you're wrong, that you were wrong. I mean, Jamie Dimon is starting to do it. BlackRock did it. Larry, think so. I don't know if it's as much about admitting you're wrong as about having blinders on that doesn't allow you to see you're wrong. It's like you see the world because you were trained a certain way. If you're in TradFi, you've been working 10, 15, 20, 30 years in this space. You have a mental map of how the world works, how the economy works. And when you really grok Bitcoin and go deep, it challenges almost every fundamental underlying assumption you have about the economy, about money, about how the world works, about saving, about stocks, about everything. And so I don't know that it's just like this reluctance to say, oh, my original idea about Bitcoin was wrong. I think it's hard for people to get it. And the deeper they're ingrained in the other version of the economy, the harder it is for them to extract themselves from it and question all the things they thought they knew.
yeah, that's also an important point. And for them, what do they need to understand Bitcoin? Probably higher price, Bitcoin doing things that questions their assumption. They didn't do it yet.
I mean, number go up challenge helps because it helps like get over this, oh, this is just some fad and it's a tulip bubbles for our Johan, our friend in the Netherlands, who's familiar with that reference to Bitcoin as the next tulip bubble mania thing. The more it like Bitcoin just keeps on going and, keeps operating and gains steam, gains more institutional adoption, and still like faces craziness or whatever it is, and it just like takes a dip and keeps on fighting. It keeps going to the next round. It's like a boxer and it keeps getting up.
Yes.
You're like, oh no, the first time it gets hit, it's gonna get knocked down and it's gone and Bitcoin will be over. I don't have to think about it anymore. Well, it gets hit, it gets knocked down, and it gets right back up on its feet. And then like 3 months later, it's double the value it was before. And it keeps happening so much that it does eventually make people realize, wait, maybe there's something I'm missing. Maybe it's more than a tulip bubble mania. So it does help. That does. Now, Michael Saylor's statement that a lot of people kind of reiterate in one form or another is you kind of either get Bitcoin at the price you deserve or you get it when you need to get it, when you're really like facing some, existential crisis in your company or in your life. I mean, in my case, that's not what happened. I mean, I know it's just anecdotal, and as somebody who also has an academic life, you try not to get too bogged down in anecdotes. But like a quick summary of my story on Bitcoin is I was questioning capitalism. So my first book was called Climate Capitalism. So a lot of my work has been in this intersection of sustainable innovation, entrepreneurship, and capitalism. My first book was Climate Capitalism. It came out in 2011. 2000, after the crisis, I think they often call it the GFC, the Great Financial Crisis, whatever. The one from 2008 to 10 with the mortgage bubbles and everything. And there was this whole Occupy movement and people were marching on the streets. I started thinking maybe my view of capitalism is wrong and that capitalism isn't the path to solve humanity's problems, but it's actually part of the problem. I started to think that. And so then my second or third book was this one right here. It's called The Post-Capitalist Entrepreneurship for the 99%. So this was when that whole 1% movement and the 99% movement started. And I said, well, like, maybe we need to rethink capitalism around like collective development of innovation. 16, when I started writing this book. And so I wrote a lot about blockchain and crypto back then. And I actually wrote about Bitcoin. I even published a peer-reviewed paper that talked about alternative money and currencies, and I talked about Bitcoin. That was in like 2017 or 18. But the thing is, I didn't really get Bitcoin back then. I got it at a superficial level. And I also dismissed it for one of the things that was common FUD back then, which is around the environmental impact. Because most of my career, I've been around pursuing how innovation can accelerate more sustainability in society, in the world. And I thought, well, Bitcoin is a big energy consumer. I'm not interested. Now, to be fair to me, at the time, there was more truth to that assessment of Bitcoin mining back in 2016 and 17 than it is today. Now, today, over 50% of all energy for Bitcoin mining comes from sustainable sources, but that wasn't true back then. Anyway, I dismissed it. All right, fast forward. I started a company in Barcelona where I was living last for 6-7 years. I was CEO of this company. We were raising money. It was like a Web 2.5 company trying to be Web 3 to build a decentralized internet of mobility. It was called IMO. And I stepped down as CEO of that in 2024. I took a job back in academics here in Monterrey, Mexico. And I felt like I needed a new intellectual pursuit. What was a thing that I felt like could really change the direction of humanity that was beyond what I already knew and what I've already been trying to build or teach or research about? And I rediscovered Bitcoin. And when I rediscovered it, I wasn't desperate. I had a good job. We just moved to a brand new country. I didn't have this existential crisis, but I have this, which a lot of Bitcoiners have. I have this like autistic style way of like discovering something and not letting go of it and just going deeper and deeper and deeper. When you get intellectually stimulated by something and you feel like I don't fully understand it, I've got to, and you just keep going, which all of us do. That's why we're on this pod right now. So I don't think it's just, so number go up. I know it's a long answer to your question. So yes, number go up can help. Existential crisis can help, or just having a really inquisitive mind and an open mind that allows you to challenge your own constructs and way of thinking about the world when you are exposed to information that doesn't fit your mental map. So some people, when they see information that doesn't fit their mental map, they disregard it. Oh, that's an outlier. It doesn't matter. It's not really relevant. Some people are like, wait a minute. I have a theory about how the way the world works, and this thing I just learned about doesn't fit that theory. Is it possible my theory is flawed? Some people go there. And when they go there, they have to go down the rabbit hole, which is what happened to me.
Thanks. Johan, any comment from you or next question?
Yeah, so first some comments. So I really like the honey badger as a symbol of Bitcoin, like Boyd alluded to, like the boxer that may get punched down but always gets up again, and really the anti-fragility of Bitcoin. I love it. And I just want to touch on your point about mining. Red, it doesn't matter, but the mining, even in 2016, even when it didn't came from renewables, still it consumes energy that others are wasting. Somebody had a quote last week, and it was a great quote, and I paraphrase it, but still back then, or yeah, maybe not as much as now, but mining should only be profitable with wasted energy, with stranded energy. So would you agree on that point, that if it's already stranded and wasted, does it matter if it's from renewables or from other sources?
If it's stranded, I don't think it does matter. I mean, obviously, depending on how it's stranded, if the form it's being stranded in will result in release of methane or CO2 into the atmosphere if nothing is done with it, then it really doesn't matter. You're just changing the form of the energy consumption or the release of that energy and the release of the emissions. There are types of stranded energy that are sort of trapped underground and probably not going to generate direct emissions unless you do something with them. So it could depend on the form of stranded energy. I will say, if you go back to Bitcoin mining in 2016 and 17, they were nowhere near where they are now in terms of optimizing for stranded energy, nor being as flexible as they are now to work with energy operators to basically shut down the operations of Bitcoin mining when there's excess demand on the grid for traditional use cases. I could give you an example. There are times in Mexico right now where they have capacity issues and they have insufficient capacity to meet normal demand. Well, if you have Bitcoin miners tapping that same energy grid, then actually they are threatening the utility of that energy for other use cases that might even be for survival, of hospitals or, whatever that might be. So it's not exactly black and white to me, the comment you make. I think what is different now is that Bitcoin miners are so much more astute in how to optimize their operations for the least energy cost, because energy is like 85% of their entire cost of their operations. So they have to be great at optimizing it, and they're getting better all the time, and they're increasingly accelerating their search for stranded energy that is very undervalued, underutilized, and therefore not detracting from the grid. I love the examples of like capturing methane gas from landfills or from oil and gas. Instead of flaring the methane, they capture it. So yeah, it's Bitcoin mining. I mean, even back then they were doing some of it, but they weren't really aggressive about it back then.
Yeah.
I think, energy costs are growing, Bitcoin price are going, hash rates are growing. So like there's this confluence of factors that is driving the industry to really be one of the leading in all of the world as far as accelerating adoption of sustainable and or stranded energy. So now it's a poster child, and I use it all the time. It's actually, in fact, I'm doing a class tomorrow, an executive ed class tomorrow, as a matter of fact, and it's on energy challenges and opportunities in Mexico. And now I get a chance to bring the Bitcoin mining story into that. And so basically every time I teach, I find a way to bring the Bitcoin angle in. It's my thing. I do it because I'm passionate about it, and I want to like raise awareness from other people. I need orange pill the world like you're trying to do with your podcast. So yeah, Bitcoin mining is a great story now. It was not as good a story almost 10 years ago.
Yeah. I mean, I love that point that with Bitcoin, there are so many angles you can approach Bitcoin from. So that's also because that's the reason that there's so much to talk about, and Bitcoiners themselves are curious people, and they're also curious on other topics. So I mean, it's almost always fun to talk with others about Bitcoin and life and stuff.
I agree.
Before we go to Arcadia, because I'm writing for the Bitcoin layer and I'm also covering Bitcoin treasury companies, so I would love to dive into it with you. But first, on your newest book, you explore Bitcoin and the potential to drive abundance. Would it be like the same perspective that Jeff Booth has on technology, or are there points that you touch on that he didn't touch on? Maybe you can pick some main topics of your book and maybe to the stuff maybe people already know already.
Yeah, it's called Bitcoin Singularity. It came out in May. The concept behind the book was when I moved to Mexico and I started going down the rabbit hole of Bitcoin very deep, and I started reading all the books, the Jeff Booth books, the Saifedean, etc. Some of them are behind me on the wall here, Larry the Parts, and listening to podcasts like yours and many others. I kept hearing the "fix the money, fix the world" as like the slogan for Bitcoin. But like when you read those books, no offense to those authors because their books are phenomenal, they don't go very far into helping you understand how Bitcoin can fix the world. They go extremely deep into money theory, into the history of money, the evolution of money, the flaws of fiat. They'll start to touch on some of the negative externalities that happen because of fiat, but they don't even often go extremely deep in that either. Sometimes they do, like Larry Lepard went deeper in that. Like, what are the negative things that happen to humans that are living in a fiat regime? But like outside of like having sound money, what does the evolution from fiat to sound money on a Bitcoin standard, what would the world look like over what period of time? Exactly how could Bitcoin fix the world? So that's because my background has been in exploring through innovation, entrepreneurship, my own research, how technology and innovation can accelerate a more sustainable future for society, for the planet. I was really intrigued by the idea that my growing passion for Bitcoin could also align with my life's career focus on technology innovation and sustainable human trajectory. And so that's what I decided to go deep on. So you ask, like, how does it relate to, say, Jeff Booth? Interesting you say that, because so the first chapter is about what's wrong with fiat. So first explaining fiat, what is it? How is it different? Why did it? But in one chapter. So it's not a whole book like Saifedean's or whatever.
Mm-hmm.
And then I cite Saifedean and all the other great authors. My second chapter is, all right, you get that fiat is a problem, but I bet you're now saying, all right, if we had sound money, which I'm starting to mention in chapter 1, you'd be like, well, but deflation can't work. How would deflation actually make the world better? So then I do basically like a synopsis of Jeff Booth's book in chapter 2, basically. So there's chapter 1 and 2 are basically Saifedean, Lynn Alden, all those people, Jeff Booth. I cite them all and say, go read these books if you want to go deeper. So I'm like, I'm not going deep on all the subjects because other people have. I don't think you could write a book about how Bitcoin fixes the world without helping them understand what's wrong with the world, chapter 1.
Yeah,
chapter 2 is, all right, well, if we were on a sound money standard, we'd be in a deflationary world. And why is that a good thing? Okay, let's assume you now have that knowledge. And if you didn't get enough from my first 2 chapters, go read those books and then come back and start on chapter 3. So then I go through basically this kind of 3 epics of what I see the future being like. So I do have historically a bit of a futurist take to a lot of the research I've done. I love looking into the future, and that's where abundance comes from, is like, there's this, growing view in sustainability that, okay, we're 8 billion people and we're going to get to 10 billion people. And if you look at like all the planetary systems that, the loss of biodiversity and climate change, that, we have to move to scarcity and degrowth. That's like this view of a lot of sustainability professionals who have very good intentions. I'm not criticizing that they're saying it because they're trying to make people suffer. They're legitimately, for good reasons, very concerned that the trajectory we are on is not sustainable for maintaining life on Earth and all the rest. So I get it.
Yeah.
But I got into abundance by understanding where exponential technologies are going: AI, robotics, IoT, biotech, genetics, augmented reality, virtual reality, all these things. And saying, all right, what if we started pointing these technologies onto some of society's grand challenges? Could we accelerate a world that is sustainable, that is inclusive, and is also abundant, where we actually have growing access to clean energy, growing access to clean and better food, better access to clean drinking water, all these things in a way that's affordable for more and more people? And that can only happen with a deflationary world and exponential technologies, which are complementary, because you get to deflationary economies because of the innovation of humanity, which increasingly is driven by these exponential technologies. So that's kind of how I got there. Okay, so then the first few chapters of the book after the first 2 are all about what I consider where we are now, which I call Bitcoinization. So we're basically in the early adopter phase, where some companies, some governments, some people, a very small minority, are the early adopters that are starting to experience what a world might look like in a Bitcoin standard, basically. But we're early adopters. We're not part of the mainstream. Then I say around 2030. So the book kind of moves through this, like, it's like a future take on where Bitcoin adoption could go, my optimistic take, as Bitcoin helps power an abundant future. So then I say from 2030 to 2045, I think we're going to be looking at more what we call hyper Bitcoinization, which is crossing the chasm from the early adopters to starting to get more mainstream adoption. That does not mean that the majority yet, of companies, of governments, of people are acquiring Bitcoin, saving in Bitcoin, thinking in Bitcoin, and spending in Bitcoin, and what a lot of us already do. But they're on the path. They're further on the path. It's no longer just these freaks that are deep into Bitcoin that are doing it. It's like more of the world starts to get orange pilled. And then I say from 2045 to 2050, we go from hyper Bitcoinization to the name of the book, Bitcoin Singularity. And for me, Bitcoin Singularity is about a point in the future. Just like we talk about singularity with AI, but it's like a point in the future where Bitcoin becomes so ubiquitous and converges with other exponentially technologies. I have a whole chapter on AI and Bitcoin, for example, that it's not just that we are now in mass living on a Bitcoin standard, but we actually are embracing the cypherpunk ideals of the Bitcoin standard of living on Bitcoin. What does that mean? Low time preference, decreased interest in consumerism for like buying crap that ends up in a landfill in 6 months, which if your listeners don't know, the average product bought in a store ends up in a landfill within 6 months of its purchase. That's just like global averages. So it's all like this take, make, waste society that we live in now that's been accelerated by fiat that incentivizes short-term thinking. And so the book is about, well, if we actually lived on a Bitcoin standard, how could it change the world? How would it change consumption? I have a whole book on consumption, a whole chapter on consumption, a chapter on real estate in the Bitcoin world and how real estate will become more affordable as we demonetize real estate, on AI and Bitcoin. I think it was the first book ever published that has at least a whole chapter on Bitcoin treasury companies, which of course is the next subject. So that's basically the scope of the book and why I wrote it.
All right, thank you. So first, Alessandro, you take next question, and I will get that.
Thanks for explaining. One point on Bitcoin touching so many topics. 2000 years ago, they were saying all the roads lead to Rome, and now is all the arguments lead to Bitcoin. And I think it's also hard. Sometimes our friends, contacts, sometimes in the past complained because we were talking too much about Bitcoin. But it's also hard not to talk about Bitcoin because there are so many topics. Also, real estate. Why the prices are so high? The problem is money, Bitcoin. Food as well could be linked to money.
I have a chapter on fiat food as well. So okay. Yeah, agreed.
Yes. Next topic will be on Bitcoin price and the market. We have seen, actually, I was reflecting now, today we are registering is the 4th of November, and the price is just above K. And in X, it looks like it's over, we are going to zero. 4 weeks ago, we had Corey Clipstein, CEO of Swan, and we touched the last all-time high was 126.2, and at that time it was everyone say, okay, we're going to the moon, 200K, 300K by the end of the year. It's very unique how it shifts. Which is your thoughts on this 4-year cycle? Where are we, and what we can expect in the next years?
I'm not 100% sure. I believe there was a 4-year cycle tied to having as much as the Bitcoin and crypto community think there was. We may never exactly know because there's some overlap between that cycle and monetary liquidity cycles in the world and other things. So it's hard to really know in retrospect exactly what things were driving the evolution of Bitcoin price and even the psyche, like our mindset. If we think it's a 4-year cycle, we behave like a 4-year cycle. Yes. We buy and sell like it's a 4-year cycle, even if it's not. But because we think it is and we act like it is, then it is. So I think even if it did exist in the past, I do not believe it exists anymore. I mean, first of all, Bitcoin is below what it was almost a year ago. And this is supposed to be the big boom year of a 4-year cycle from our halving. So we're already questioning, the validity. Some people are saying, well, the cycle's still there, but it's just going to be extended. I don't actually think that. That doesn't mean Bitcoin won't have its own cycles and it won't map to other liquidity cycles and other things happening in the economy. For sure, it will continue to be affected by that and vice versa. But I don't actually think there's a 4-year cycle, and I definitely don't think it's tied to the halving, especially not anymore. If it did before, you could argue why. You could argue that it could have been more so before because you were producing a lot more Bitcoin per day in mining rewards, and the institutions hadn't come yet. And so there wasn't this like latent, continuous, inelastic demand regardless of price, which is what institutions bring. They don't really care about the price, they're just buying. So because that part has changed, even if the cycle did exist in the past, we could dispute that, tied to halving or not. I think the halving is kind of irrelevant now. It's 450 Bitcoins mined a day. That has nothing to do with supply and demand of Bitcoin anymore. And imagine in 2 years when we have our next halving and it's 225 a day. It's like, and then you have 50 nation states that are buying regularly. You have, thousands of public companies buying. Like that amount of new supply is irrelevant. Not only that, this wasn't true in previous halving cycles, but it's more true now. A lot of Bitcoin miners are doing their own Bitcoin treasury thing now, and they're hoarding their own Bitcoin too. And they're not even introducing that as new supply into the market because they're holding it. And then what they're doing to sustain them is either raising money like treasury companies do, or they're diversifying into offering AI data center support, and they're monetizing fiat revenues from that to cover their operating expenses, and they're holding their Bitcoin anyway. So I think the halving cycle thing is gone. If it ever existed, it doesn't exist anymore.
Okay. On this regard, Jordi Visser wrote a great article a few days ago. I don't know if you read it. It's really the end of the IPO and now the start of the institutionalization of Bitcoin.
I'm a huge fan of Jordi Visser. Like I'm a diehard mountain biker, and every Saturday and usually Sunday and sometimes once in the week, I mountain bike in the mountains of Monterey, often with one of my partners in the company who's also a diehard mountain biker. And when I'm on my own, I'm listening to podcasts. And every Saturday morning, my podcast, I download it when I wake up in the morning. It's Jordi Visser's Saturday interviews with Pompliano. Those things are gold. He goes through AI, macro, and Bitcoin and like what's happening in the last week, and it's so good. So I'm a huge fan of Visser. I actually never thought about it the way he articulated, which is a really good way of saying it, but we've witnessed it. What he's basically saying around the IPO moment for Bitcoin, for your listeners who didn't read it, is basically because Bitcoin doesn't have an IPO, it's not a private company. What happens in IPOs is you have early investors who invest in the company way before it was publicly listed, and they have very little liquidity because when you buy shares in a private company, they're not liquid. There are new platforms that have emerged to try to create some liquidity in the secondary market for if you bought shares in a company and it hasn't gone public yet, sell some of it. But generally speaking, they're not liquid. And his argument is that historically, some of these early investors in Bitcoin that acquired a lot of Bitcoin very cheaply could have never meaningfully sold what they held without seeing a massive crash in the price, because it would be injecting just too much supply for the amount of demand of Bitcoin, and that wouldn't be good for them, for their holdings. And a lot of these people aren't like, it's not like they stopped believing in Bitcoin. They just, went from something they bought 15 years ago for $3,000, now worth $3 billion. And they actually want to tap into some of that. I mean, who wouldn't? You have to understand that. But sometimes they're still holding Bitcoin. So they don't want to crash the market. So his argument is that basically the IPO moment for Bitcoin is now because you have these OGs who are selling 10,000 Bitcoin at a time. And in the past, they could have never done that. But now that it's at this price, over 100,000, with all these inelastic demand buyers of Bitcoin, it's the right time for them to, take some chips off the table and stack some money for their lives for whatever they want to do. So yeah, I mean, we've been witnessing that. I just think he framed it in a really interesting way about referring to it as an IPO.
Yeah, great. And then it's healthy for Bitcoin because these Bitcoin are both from people who have maybe long. If you buy now, you will sell later on at 200, 300, 1 million. Also, we are not. It's going down, but it's not crashing the price. So will be easy
Agreed.
identity development. Great.
Just a few seconds to remind to our listeners that this podcast is sponsored by Bitvault. Bitvault.sv. I invite you to head over to the site. It's the first Bitcoin wallet solution to solve the problems of physical attacks and hacks, thanks to our time delay over multi-sig technology. The beta is for free, coming out in October. I invite you to head over to the site and leave your email to get notified. Thank you very much.
Johan, on you for your next question.
Yes. So yeah, we hope that this sets that this selling of the OGs is setting a new floor. So let's talk about ArcadiaB. I believe that the company already existed under a different name, but you are offering services related to Bitcoin custody, Bitcoin on and off ramp. So the company has a operational side, and you are the chief strategic officer. Are there tax advantages like in Japan? Are those existing in Mexico? Because I think a lot of investors saw in the last year that we saw the MNAV expansions of a lot of companies, but also this compression. And the question now is like a company that only issues common stock, that isn't enough to be sustainable for the long run. So what are the plans of ArcadiaB, like in the capital structure, trying to match duration of Bitcoin with intelligent leverage or like amplification, how Michael Saylor likes to call it? Yeah, let us hear us about the plans of ArcadiaB.
Yeah, so you're right. ArcadiaB started its life as a company called Capital X in Mexico in 2017. It's the longest running Bitcoin company in Mexico. Bootstrapped, organically grew, started, as you said, as off and on ramps to Bitcoin and stable coins, but no shitcoins, no other crypto or anything else. We now have a Bitcoin backed lending product, which we're expanding to offer and getting into the real estate space as well. We have a new DCA model coming out, so dollar cost averaging model. We have a credit card, which will soon have a cash back component to it in Bitcoin. So we have quite a few service custody. We have quite a few services for our current audience is primarily high net worth individuals and business owners, and we're gradually bringing on more retail. And we're launching a brand new app, which will probably come out in January. It's all been totally redesigned. It's gorgeous. I can't wait. But yeah, we have to wait a few months till it's deployed now. So that's like the underlying business. And I think this makes us extremely unique in the Bitcoin treasury space. You have people like Jack Mullers, who has a great history of operating a Bitcoin services business and is launching 21, which aims to do something similar at scale that we're also doing, which is marrying the idea of a treasury company and Bitcoin services. But the difference is our company started as a Bitcoin services company 8 years ago. We have a track record in Mexico. We have our own custody model. We have our own Bitcoin-backed lending model. All these services that we've been offering to others, we benefit from. Why? Well, we don't have to custody our Bitcoin in Coinbase. We have our own custody model for our customers. We're doing it for ourselves.
Amen. Amen.
Thank you. We're going to be publishing very soon our proof of reserves because we control our Bitcoin. We can do that. If we find ourselves, having needs to access cash, for example, to service some yield product we have on the treasury side, we have our own Bitcoin-backed lending program. We can put our own Bitcoin in our own lending program to take out fiat to service fiat debt on our instrument. These are things we can do that virtually no other treasury company in the world can do. So going to your specific question on kind of what our ambitions are and what the regulatory context is in Mexico for this. So Mexico, we're the first treasury company in Mexico. Mexico's top 15 GDP worldwide, has a lot of trapped capital. For example, we have these pension funds, they're called Afores, $350 billion in those. $700 billion is invested domestically in our public bond markets, which return less than the increase in M2 money growth per year. So money growth in Mexico, M2 growth is 10% per year. So there's a great opportunity here. And going to your tax question, similar to Japan, for retail investors, only for retail this applies. If you sell spot Bitcoin and have a capital gain, you're subject to up to 35% tax on that. If you sell equities, your capital gain is capped at 10%. So there's a big tax arbitrage there. But the three of us on this call are cypherpunk Bitcoiners to some degree, right?
Yeah.
And so the next question is, well, that's lame, Boyd. You're basically saying you have a tax arbitrage that is going to encourage more people to buy your shares than to actually buy spot Bitcoin. And so here's our argument. We've thought about it a lot. We collectively have to meet people where they are. I think this like cypherpunk only view of Bitcoin is that everyone has to own spot Bitcoin in self-custody. And if you don't, you're not even a Bitcoiner. If you have Bitcoin in an ETF, if you have Bitcoin in custody in Coinbase, you don't count. To me, that's dumb. Like, you remember talking about the journey we're on in my book to go from, yeah, sure, the Bitcoiners and the Bitcoinization, we're in the first group. Yeah, okay, fine. We're the crazy ones. But the rest of the world isn't as crazy as us. They need like products and services that meet them where they are, not force them into what we think they need to do. Not everyone's on the freedom train and like self-custody, and yeah, not everyone's there yet. Probably more of them will get there. But like on their journey, why not help them? So here's our view. Like, we're the only, I think right now, as of today, we're probably the only company in the world. Of course, our instruments are not yet publicly available, but once they are in the public markets, as of today, we're the only company in the world that can kind of offer this. You want exposure to Bitcoin? How do you want it? We think the best way is to have it in self-custody, own it. You buy it from us. We get the best rates in Mexico, which we do. We can teach you how to self-custody. We even have a white glove service for that. That's the best way to do it. Oh, you're not ready for that? No problem. How about buy spot Bitcoin and we'll custody it for you? Or when you're ready, we also have a multi-sig model where you can hold one key so you don't have all the pressure, but you start to learn what it's like to custody Bitcoin and the wallets and all the rest of it. You don't want any of that yet, or maybe you don't have a mandate that allows you to do that. That's fine. We've got instruments in the public markets. You can get exposure to Bitcoin through us buying Bitcoin with the money you invest. And our ambition is, we're very serious about this. We want to tokenize all our instruments. There are some issues around accredited investor rules and all that. So we have to work it out exactly when and how we can tokenize which instruments we release. And our big ambition is to have it so that somebody who buys, let's say because of tax advantage and they're not diehard Bitcoiners yet, they do buy some of our listed instruments in the public markets. But our goal is over time to gradually orange pill all these people more and more until they start migrating more of their portfolio to Bitcoin and self-custody. We can provide a bridge for that too. We can tokenize their equity or their debt instruments from us and allow them to bring that tokenized instrument into the app and then use it for a Bitcoin-backed loan, or migrate it from the tokenized instrument to its fiat value converted into self-custody Bitcoin. Okay, you have $1,000 worth of this tokenized share in our company, put it in the app. You can do whatever you want with it. You can use it like it was Bitcoin for a loan, or you can actually turn it into Bitcoin if you want. And we'll just, you sell your $1,000 and you get $1,000 worth of Bitcoin, and then you can go into the custody model. So this, I think, is a super powerful way of thinking about meeting people where they are. And the masses, we all know them, they're getting curious about Bitcoin, but they're nowhere near ready to figure out how to buy and keep it in self-custody. So we just have to be more pragmatic. If we want to orange pill the world and accelerate hyper Bitcoinization, we have to meet people where they are. And that's what we're trying to do.
I mean, that sounds great. And I mean, those are great ideas. So basically, then you also become your own broker of your own stocks within your app, right?
Yeah. In that scenario, we would be, yeah.
Yeah. And are there plans also to like lever up, like using debt or debt-like instruments like perpetual preferred
Yeah.
equity?
Yeah. How much can I say about this? We stand on the shoulders of greats, right? Michael Saylor, I actually have met him and briefly introduced what we're doing at Arcadia to him in New York a month or two ago. Matt Cole, who's the CEO of Strive, I have gotten direct feedback from him. Andrew Webley as well. I shared a stage with him from Smarter Web. We're getting feedback and insight from them, either directly or indirectly, watching, learning from them. The industry's learning and evolving, and we're learning about things like moving away from ATMs as like massive dilution for your existing shareholders, moving more towards perpetual preferreds. So we are way on the spectrum. We're already on the preferred side of things and already working on our first instruments that are in the preferred area. To do a truly proper perpetual preferred, you have to have a much larger Bitcoin stack than we will have initially. And so, you have to be realistic about where you are as a treasury company on your journey and what instruments can work at that stage of your journey in terms of stacking. So we are focusing mostly on preferreds.
Yeah, all right. So yes, I agree that you first need to build up this strong balance sheet before the preferreds have this credibility, this BTC rating of 4, 5, 6 times like the other ones have. So
We
yeah,
have 16 Bitcoin right now, which,
right.
for a tiny private company, that's actually kind of cool. Like we're in the top 20 in Bitcoin treasuries for private companies worldwide, but it's a very small number and isn't enough of a, depth of the balance sheet to do anything big yet. But we're raising money privately from accredited investors right now as we move towards issuing our public instruments in Mexico. And the idea is to, solidify more of that treasury we have before we start issuing these public instruments.
Yeah. Okay. Makes sense. Thank you.
Thanks, Boyd. I totally agree, and great what you are doing with the mindset of meeting people where they are, because not everyone is ready now for self custody, and not every, especially. I also say those who are having the cyberpunk anarchists and so on. If they had this sensibility, they are already in Bitcoin. So those who joined from 2025, they don't have this sensibility. Some of them, they will develop maybe learning about Bitcoin, but it will not be the main reason why they move to Bitcoin. Also, especially living in the West world, a person who has a job, a family, he doesn't want to flee to another country or fight against the government. Is that the money are maybe losing value and want to invest, and then he's using Bitcoin as investment. And that's the first step.
Agreed.
Thanks. I think we are approaching now the end of the 60 minutes. Our last question will be, which is the biggest threat for Bitcoin, for the Bitcoinization or hyper-Bitcoinization that you mentioned in your book that we will see in the next 15, 20 years?
I mean, part of my flaw in answering this is I tend to be an eternal optimist anyway. And so I don't see as many of those things. I mean, the obvious one is quantum computing that everyone talks about, and I just don't see it. I mean, yeah, sure. If the Bitcoin community did zero to address the quantum risk or threat in the next 10 or 15 years, yeah, all our wallets would be under threat big time, for sure. But who believes that a multi-trillion-dollar industry with like the most robust energy infrastructure and, security infrastructure the world has ever seen is just going to sit around and do nothing and let quantum just attack the wallets? It's not going to happen. There are quantum resistant wallet designs that have already, emerged. They will happen. So I don't really worry about that. I guess, I don't really think anything can stop Bitcoin. I really don't. I don't think any human can, any company can, any government can. Nobody can stop Bitcoin. I think the only thing that can happen, which would be extremely concerning and very possible, in fact, I'm going to go beyond possible. I'm going to say it will happen in the next 20 years, which is the time frame you just said. A major government is going to find a way to extract Bitcoin that's not well protected in a custody situation. So that might be like, there's a lot of people claiming the government might try to do that with strategy. I don't know. I hope not. With Coinbase or with an exchange in another smaller market, whether that's directly hacking those exchanges or whether it's literally just like what the US did with gold. I mean, the US did that with gold. Bolivia did it in the last year with dollars. They said every citizen with a US dollar bank account in Bolivia, all your dollars are now ours. They're in a currency crisis. They literally just took all the dollars and they transferred them a very poor rate of exchange to the local Bolivian currency. Argentina has done this similar thing around playing with the official rate of the dollar exchange and the unofficial black market rate.
All right.
So my point is, this is happening already around the world without Bitcoin. To believe it won't happen with Bitcoin, the best store of value the world has ever seen, like, it's absolutely going to happen. So no one can destroy or impede the progress of Bitcoin globally, but governments could really screw their citizens if their citizens are not prepared, or maybe even if they are. I mean, you can imagine a government at a high scale wrench attack kind of thing where the government's got, military pointing guns at every person they know who has any Bitcoin, whether you have it in self-custody or whatever form you have it in. So that's the biggest threat to Bitcoin, is the personal liberty and freedom of people who've become Bitcoiners, and their Bitcoin is not in a situation they can ultimately escape with without threat of violence. That worries me, because I'm 100% sure we will see a government step over their bounds and do this somewhere, sometime.
Okay, thanks. We'll see, at least next year. Hopefully, when it's not happening, at least the next 3-5 years.
I hope not.
Last but not least, where can people find you?
Best way is on X or Twitter at Boyd Cohen. I'm fairly active there. I do get busy, but that's probably the easiest way to find me for sure.
Yes, yeah, I see. Also, now I'm following you since some months, and it's great posting from your site. Also recommend to follow you.
Thank you.
Then we are.
I appreciate it.
Other conversation. Thanks a lot, Boyd. It was a really interesting topic. Also, a great explanation also of your book, your Bitcoin Treasury Company. It's great to have people like you in the Bitcoin ecosystem. Actually, once we learn about Bitcoin, it's great to educate people about Bitcoin. And even if Bitcoin has no marketing team, we are all part of the team.
We are the marketing team.
We're all Satoshi.
Exactly.
Thanks
Thank you, Alessandro. Johan, I guess I'll see you in Amsterdam in a week.
Yes, I'm looking forward to it, and thank you for making time to come on another show. Thank you,
My
Boyd.
pleasure. Thanks, guys.
All right.
Have a nice
Bye.
time.
Thanks.